So as we approach the earnings season, if you've watched the market even for just 4 to 5 months and you've seen previous stocks report earnings, you'll notice that they start behaving in erratic ways, in ways that maybe just don't make sense. And the thing is that stocks do behave erratically when it comes to earnings releases and earnings reports. Oftentimes, if you think that, hey, this stock is going to do phenomenal on earnings, and it may have fantastic and great earnings. But what happens to the stock is that it actually sells off. On the flip side, a stock may have a horrible earnings, but it actually goes to the upside. You're probably scratching your head wondering, why does this happen? Or why do stocks behave in this way? And why does the earnings play this effect on the stock? Wouldn't it make sense for a stock to continue heading higher and continue moving to the upside if the earnings are fantastic? And in theory, yes, this is true, but it doesn't always work that way. The thing is that a stock's price movement after earnings is based on expectations and not directly related to the earnings that were reported. So what I mean by this is that it's based on what these big money managers, institutions, project in the future as well. Because sometimes in the earnings reports, these things can come out, such as maybe their sales were fantastic, but they're starting to borrow a lot of money, and they may start to worry about these things. So the future may not look as good, and that way the stock may end up selling off. So there's a lot of factors that go into these reports, but it's based on expectations. So let me give you an example of how this expectation applies to stocks and earnings, and also to real life. So it really applies in a lot of other aspects that day to day that we go through. So let's just say you have kids, and you have 1 or 2 kids of your own, and you're looking to throw a birthday party, and your kids really want to go bowling. They really love bowling. They want to go, but you only have one bowling place nearby. And in this bowling place, you've heard a lot of bad stories. You've heard stories where the cake was flipped over. You've heard that things were dirty, things were messy. There's alcohol there. So you've heard a lot of bad stories about this bowling place. But your kids really want to go, and it's the only bowling place available to you, at least in the region that you live in. So you decide, okay, so we're going to go and we'll go bowling. We'll take a chance and we'll go bowling. So as you show up, things are actually not as bad as you've heard, or things are not as bad as they seem. Things are not as fantastic. Things are not as great. You're not going to get perfect silverware. You're not going to get everything that you want. But they're really not as bad. Things are fairly clean, things get decorated pretty nicely, and the kids have a great time. And you to yourself start saying, wow, this place is actually quite good. Even though the place may be just an all right place, to yourself, that's really fantastic and amazing, because your expectations of that place were just so horrible from the things that you heard of. So that horrible mindset, thinking about things in this bad mindset, all of a sudden made you think about it in a much better sense, because your expectations were just so bad. So that's how it applies in life, and it also applies the same way when it comes to stock earnings and how the stocks end up performing after those earnings. So if certain money managers expected a certain stock to have explosive earnings and explosive growth, but it just had pretty good growth, it didn't have fantastic growth, that stock may sell off because we were expecting a much higher or bigger growth. And if it had just regular growth, then that stock may sell off, even though the earnings were actually pretty decent. So it's all based on this expectations and what people or money managers or the big boys expected that stock to do and what they expect it to do in the future. So thank you for joining me in this video lesson. And if you'd like to continue watching videos like this one, just click one of the thumbnails right below this video and you'll continue watching some more video lessons like this one. And if you want to see some of the stocks that I'm watching in the current market conditions, and you want to get some more insight, some in-depth training about 30 minutes long, then go ahead, click this link right above, and when you get to that link, enter your name and email address, and you'll be sure to get notified when my rapid recaps are released. Thanks for joining me, and remember to do what you love, contribute to others, but most importantly, live life abundantly. I'll see you next time.